Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our reversion to mean systems like you see here, and our new KISS trend following systems, which are pretty amazing. Universal type systems designed to catch long-term trends, raise stops, we call smart trailing stops over time, and is seemingly profitable on nearly any instrument. So a pretty universal system. But anyway, let's get started with the video. Markets had a nice correction, as you know, since July, into July. Remember, we discussed that back in July that the market was likely to have a correction in July or in August, and that's exactly what's happened. So let's go ahead and do a review of the markets here. This is our back-end recording. This is going to be a detailed technical analysis review of the markets for August 16th, 2023. Let me go ahead and get the newsletter started here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 16th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. General theme as I always keep. And as far as the market, as you know, we've had a nice correction since late July. Remember, back in July, we talked about we were looking for a correction in August and September, and that's unfolding exactly. It's also playing out with seasonality. So nice correction so far in the market. The S&P is down about 200 points from the highs. So pretty good correction. Nothing's changed as far as the major wave counts. Remember, there's 3 options really. They all called for a pullback. So the one option would be that we're nearing a fourth wave, a completion of this fourth wave pullback, and once it's over, we're going to go back to new all-time highs. The other view that we've been supporting more is this is wave A of 4. When we bottom here, we're going to get a lower high wave B, then down again in C. The other one we really don't support, but it's still valid, is major tops in place. So we favor one of those waves 4 scenarios. All right, and as far as remember guys, if you haven't done so on the KISS trend systems, make sure to go there and set up your email notification so that you'll be alerted automatically whenever there's new smart trailing stop generated. Next. So before we get into the heart of the newsletter, we're going to discuss some admin comments here. So today we had a couple of the reversion to mean systems trigger trades. We didn't have any trigger on SPY, the SPY ETF. Remember, we run 21 systems, reversion to mean systems, on ES and on SPY. So nothing triggered on SPY. All the systems are flat on the SPY ETF. But on ES, we had a second entry on the S trap. You can see it here on the upper left. You can see a couple weeks ago it had taken along and made just a tiny profit, got out of Dodge just perfectly on Monday, and then of course we sold off hard and went along again yesterday, and it took a second entry today. Now today the QE swing 3 took a first entry. That's a pretty high probable system. I think it has a profit factor of 25, and you can see all the other systems are flat. And you can see those other reversion to mean systems, they actually did a good job getting out. They were either flat trades or very, very minor losing trades. So they actually did a pretty good job with that. So right now we have 2 open positions on the reversion to mean systems. I sent this out to subscribers this afternoon. So if you're a member of the website, you would have received those alerts. If you're not a subscriber, you should subscribe so you can start receiving notifications for our systems. Next. Image number 3. So I want to talk about the KISS systems briefly. So this is an example of the triple Qs with the KISS trend system. Okay, and then the charts at first glance look identical, right? But there's a difference here. The one on the left exits exactly at the STS smart trailing stop. That means whatever the smart trailing stop is, you can literally set a sell stop there and it would be triggered anytime during the day. Now the one on the right, the system doesn't exit intraday. Instead, it waits for a confirming closing bar. Okay. And that's what we've usually been doing. However, I ran some statistics, and the statistics are actually better to just go ahead and exit intraday if that smart trailing stop is hit. And let me show you an example of that. So image number 4, here is the statistics. This is going back 20 years for the KISS system on the triple Qs. Okay, so the one that exits at the close on the left, profit factor of 5.11, about 60% winning trades, which is typical for trend following systems. Remember, trend following systems, guys, aren't going to have 90% winning trades like reversion to mean. Anyway, on the one on the right, you can see when it exits at the STS price, and you can see the stats jump up quite a bit. Profit factor from 5.1 to 6.7. So that's a pretty nice jump, and the total winning percentage bumps up slightly from 59.5 to 62%. Again, obviously the same number of trades, 74 trades. But so going forward, we're going to be making some changes to the KISS system tables where they will show the exits at the STS price instead of at the close. Okay, that's actually beneficial for you guys because you can literally use the smart trailing stop, as a hard stop in your trading program. So you can just use, instead of waiting for the close, just go ahead and set your exit at the STS. But anyway, I wanted to share that with you. And the cool thing about these KISS systems, guys, again, while a profit factor of 6.7 isn't, like the reversion to mean systems, it's not 25 or 15 or whatever, it's still pretty damn impressive considering these are completely unoptimized. I can throw these on virtually any stock or ETF and you get a profit factor of 3, 4, 5, 6. That's impressive. I've never seen that with a system. Almost every other system that I've seen, you had to do some sort of back test or curve fit it to that instrument at that time. But the KISS systems clearly have some universal rules, that apply across everything. Pretty cool. It's very exclusive to Breakpoint trades. No one else has it. And again, how did I develop something like that? I've been doing this over 25 years. It took all those years of looking at, probably millions of charts, seeing things in the market, experiencing things. I could not have developed something like this 10 years ago, 15 years ago. Life is a journey. Trading is a journey as well. You have to go through all that time, see so many examples and things to finally, figure out enough things through experience to come up with these things. Anyway, sorry to be long-winded, but pretty cool. This KISS systems appear to be more profitable if you exit at the STS stop, smart trailing stop, instead of at the close. Next. Item number 5 shows, moving back to the market, shows the index sector table, what transpired today and this week. You can see nice pullback in the market this week. S&P down about 33 points. S&P down 0.76%. Dow down 0.5%. NASDAQ over 1%. Same for the Russell. And solid losses across the board for the week. As far as the major market sectors, pretty broad-based sell-off. Only 2 sectors were up, and they were up just minor. Metals and mining and utilities, especially utilities more defensive. Currencies, US dollar continues to be strong. That's been the problem for the market. That and the 10-year treasury yield just continue to rally. Cryptocurrency's been down. The stocks have been leading down, so I think that favors more negative for the crypto as well. Commodities, mostly to the downside with that rallying dollar. Crude oil down 2%. The index, DBC, down 0.4%, down 2% for the week. Big losses on the week for all these ETFs. 2% for the index, 4.6% for crude oil, 6.4% for natural gas. So big losses here across the board. And precious metals, they just can't bounce. But the reason why is because of that rally in dollar and 10-year treasury yield. One of those need to reverse for the gold to start finding some support. And the stocks have been leading down, which is always a negative. They've been leading down for weeks. We warned about that, and that continues to be so. You could see this week GDX down 5.5% versus 1.14% for gold. And look at today, GDX down 1.35% versus 0.6% for gold. And of course, the 10 and 30 year continue to ratchet up. Next, item number 6 shows the economic news calendar. Tomorrow is Thursday. We have the initial jobless claims, Philly Fed, natural gas inventories. And let's go and jump to the charts, guys. So the first chart below, item number 7, is a weekly chart of the S&P. I'm showing you this because if you've been following our videos on YouTube or you're a subscriber, you know that we talked about way back in late spring, we talked about our thought would be that the market would rally and hold up through the summer, and then we would get a correction in the August to September timeframe. And we talked about this again in July, and this is exactly what's happened. The S&P rallied all the way up to late July, tagged the upper channel line, tagged this resistance area, and is sold off now 3 weeks in a row. You can see it's below its 9-week EMA now. So seasonality is playing out, and technical analysis. It was right up against resistance. And of course, when you get to those nosebleed areas at resistance, the market simply needs a catalyst to pull back. And the catalyst, as you know, has been the rally in US dollar and 10-year treasury yields, and of course, concerns over a slowdown in China. Next. And let's talk about some of these indicators, guys. Over the years, I've built a lot of these custom indicators. You should really save some of these on your own and start utilizing them. So this is the NYAD, that's the NYSE Advanced Decline Issues. This is the 10-day average versus the S&P, and you can see whenever you get these lower highs in the NYAD and higher highs on the S&P, very powerful about pointing out these major little inflection point tops. Okay, you had this divergence in late July, and lo and behold, it's produced a nice sell-off in the market. Again, sometimes you don't get a sell-off like we've had. You could see in late June you had a little divergence there. It only produced a pullback for about a week, but it still gave you something. Same thing for April, but this played out well. Chart number 9, here's the BPSPX. Think of this kind of like a system, like a trend system. So you get your buy and sell signals when the BPSPX moves over these moving averages. And you can see, again, they're not perfect, but they're not going to ever catch a top or a bottom. But overall, they're pretty good. They catch a lot of the trend. You could see this gave a sell signal basically back in early August. The last buy signal was in early June and in May. And it's been pretty good. Chart number 10, here's the NYSI McClellan oscillator with the 9 EMA. So basically a crossover system. Compare it to the S&P, and again, you're not going to catch the peaks, but overall catches pretty good, 80% of the trend. Look at this, great sell signal there in early August. I gave you a nice exit, nice buy signal there in June, little sell signal in late April, buy signal there in March, sell signal there in February. Very useful trend following type system. Chart number 11, here's another one. The NYSI again is a weekly, and this gave a great sell signal off this trigger a couple weeks ago, as you can see. And you can see the previous buy signals. The last one was in May, was a great buy signal. Next, chart number 12, here's the NYMO. Now, short term, guys, we are getting very stretched here. Look how far the NYMO McClellan oscillator has fallen. It's getting near, in fact, the March lows. So again, obviously it can get down much more, especially if some more negative news comes out of China. The 10-year continues to rally, something spooks the market. But this is getting very oversold. It's also below its lower Bollinger Bands. So barring some black swan or some really negative news, I do think the market is getting closer to some sort of oversold rally. And by the way, guys, and this is if you're on YouTube, if you're not a subscriber, one benefit of subscribing to Breakpoint Trades is you can get all these live charts from us directly from our newsletter. So here's that NYSI indicator with a 9 EMA. All you got to do is click View Live Chart, and you get the live stockcharts.com chart. You can save it. You can check it later instead of just looking at a static image. And that's what separates Breakpoint Trades from a lot of other services. We actually give you the live charts to all these cool things that we've developed. So again, if you're not a subscriber, you're just watching on YouTube, you're losing that benefit that you get from the newsletters that are sent out to our subscribers. Okay, so just wanted to point that out. Next, let's move to the market indexes now. Chart number 13, here's the chart of the 5 key major indexes. Again, nice correction from late July. All the indexes closed below their lower Bollinger Bands today, basically, especially the Russell, really been weakening. Next, chart 14, here's the Dow. So the Dow is getting interesting here, guys. The Dow, as you know, had this inverse head and shoulder pattern that we talked about back in June, and that played out. This was a major resistance area neckline, which it took out. It's pulled all the way back, and notice it's approaching this horizontal level around the 13,600 area. This was previous resistance. You can see tested 3 times. It is now support. So if we get to here, watch for potential major support right at this horizontal level and the 50-day moving average. Could be a low risk entry there. Next. Moving on to the S&P 500 chart, chart number 15. Here's the zoomed in daily view of the S&P. Again, as you know, this nice clean channel we've been showing. Every time we tested the upper channel line, we've got a little pullback. And the last time we tested was late July. That was the time to really get defensive with the market, get some hedges on. Anyway, nice 200-point correction from those highs. We're well in with this demand zone. The negative here is, we lost the 50-day moving average and this channel line. Good things usually don't occur below the 50-day moving average unless you quickly regain it. But we'll see. This is the demand zone. We'll see if we can bounce here soon or not. Next. Chart number 16. Here's another daily view that I've been showing. This nice channel, which we stalled at the top of the channel. And we lost the uptrend channel yesterday, moving more lower today. Next, chart number 17, here's the other daily S&P chart with the channel. We also lost this channel. Another big area, guys, if the market, were to sell off another 100 points or 75 points, would be this big area here around the 43.20-25 area. This was previous big resistance in 2022. We broke through it in July. It was back tested, we broke through it in June. It was back tested in June right there. You see that? So this is a major support. So if we come down, if we continue to sell off here, that could be the next target if we don't bounce here in the short term. Also, let me illustrate this with my pen. So again, I could see us potentially coming. If things get ugly, we may test this area, then we get our rally. The other thing that may occur, like I said, if this is a wave A down, right? Let me actually start this over. If this is a wave A down and we soon get a wave B lower high bounce, then we come down again and see, this would come down sometime in September, and that would really match up with seasonality. Then we get our end of year rally. That's probably my favored event. So again, we'll see which one plays out. And let's move on. Image number 18, here's the S&P KISS trend system. This stopped out, as you know. And if you're used the intraday stop, you'd have stopped that a couple days ago. But it was still a nice winning trade from that March entry, but it is now flat. That's the beauty of the KISS systems. They'll stay in a trend, but they give you a nice smart trailing stop and exit plan so that you don't have to go through strong corrections. Next. Chart 19, here's the 4 time frames. Not a lot to say here. We've been below the ATRs and all these time frames, which is resistance, and prices continues to melt down. These support cycles, price did not hold these. We lost those. We only got a little bitty bounce off those A's the other day, the amateur selling. They did produce a little bounce, but then we've come down again. So really not seeing a lot here, just in a strong downtrend. Next. Chart 20, here's the half-day chart. Again, basically similar look to that daily chart. We broke the channel. Remember, we lost the 50-day moving average. We're in this little demand zone. We'll see if this can hold us or not. Next. Chart 21, here's the 2-hour view showing the supply and demand zones. And so, we just continue to stair step down, lower highs, lower lows, and we're in this other bigger demand zone. Next. Chart 22 is a 60-minute chart. It's just a nice clean channel, and that's what we've been doing, just channeling down. The other day we filled that gap where you see the horizontal dotted line. That didn't matter. Prices continue to melt lower. There is another little demand zone down here to 43.90. Again, we'll see what happens tomorrow, and overnight here, futures are down again. Next. Chart 23, here's the moving to the triple Qs. As you know, again, this lost its 50-day moving average the other day. That was a negative, and just continues to work lower. By the way, this number here, 359.60, I got this from this pullback in February into March. It was about 28.5 points. That's symmetry. So same here, a 28.5 point pullback from the highs is roughly here. Now, if the Qs move below this, you have a bearish break in symmetry. Okay, symmetry is not very far away, so I could easily see that broken if we continue to sell off here. That would definitely confirm the next rally forming a lower high. Next. Chart 24, just showing that other chart, this potential ABC. But again, so far, we continue to melt down, and we've filled this demand zone so far. Next. Chart 25, here's the half-day chart I discussed on Monday. So this area I said is big support. We're getting closer to it. It's around this 357 and a half area. This is a big area. I'd be watching for potential bounce because it was previous resistance, turned support. So it is now a big support area. Next. Chart 26, here's the 2-hour view. We're still in this kind of wedge, but sometimes if things really get negative, you can just blow out through the bottom of the wedge. But for now, we're still in it. Next. Chart 27, here's a 30-minute chart just showing the relentless downtrend channel, lower highs, lower lows. Really not a lot to say. Ugly action. Next. Chart 28, here's the KISS trend system on the daily S&P. Again, this got stopped out, especially if you use the intraday price, 371.40. You'd have stopped out about a week last Friday, essentially. It would have locked you in a really nice gain from that March 13th entry. Next. Chart 29, here's the 4 time frames. Again, very similar to the Qs, or the S&P, below the ATR and all these time frames. Just downtrending strongly, not really seeing anything stand out here. Next. Chart 30, here's Apple. Apple continues to be weak, though there is a little RSI divergence here. I'm still watching for an eventual lower high wave B. Again, my target over time is this 200-day moving average, but I don't think we go straight there. I think sometime soon we get a rally and we get a lower high, but we'll see. So far, hasn't been able to get a bounce. Next. Chart 31, here's the 30-minute chart. You can see the little horizontal channel it's in. Closed right back on this area. This could easily break down again. Next. Chart 32, there's the bigger picture monthly chart going back to 2007. Hell of a run for Apple, as you know. But again, look how extended it got. You got a doji in July, and look at this big bearish engulfing candle. Almost back to the, getting close to the 9-month EMA. Remember, this is a monthly chart. And look at this big MACD divergence there. You had a pretty good higher high there at 197, 198 versus the 181 area from early 2022. And look at the MACD, did not even get close to matching it. So huge MACD monthly divergence there. Longer term, could be setting up to a bigger top for Apple. Next, chart 33, here's NVIDIA. NVIDIA had that big rally on Monday, but I said, I think it's going to likely form a lower high. So you could see pulling back a little bit here, but obviously holding up pretty well. But next, chart 34, IWM, Russell 2000. Boy, this thing has melted down. Hope some of you guys sold that peak in July. Basically, price stalled perfectly at the top of that ascending triangle type pattern. Remember, we were bullish back there in April, May timeframe when we were at the lower channel. Our target was the upper area. That's been achieved, and hell of a pullback since. Prices pull back now between the 38 to 50% fibs. This has really had a good correction. 200-day moving average isn't very far away on this. And by the way, this has broken symmetry. This pullback here is the largest pullback, since the low in March and May. So this suggests a lower high eventually on the next rally. By the way, remember I always state, draw the trend lines on the 14 RSI. Look how great of a signal that gave you. Obviously didn't get you at the high. That would have been the place to really take a short, but pretty good signal nonetheless, even right there. Next, chart 35, here's the 2-hour view. This rising wedge is obviously played out. We're melting down. Here's a couple demand zones to watch. We're in a portion of this upper one. We got another one below. Next, chart 36, here's a 60-minute chart showing this channel Steve showed last night. We're basically right at the bottom of it. So there you go on the indexes, guys. Again, pretty ugly action so far this August. We'll see if we can get a bounce sometime soon or not. Next, let's look at some of these indicators. Here's the VIX. So the VIX, again, bounced right off this middle Bollinger Band, as you can see. You got to keep an eye on this. Next, chart 38, here's the percentage of stocks in the S&P 500 that traded above their 20-day EMA. By the way, I've got a typo here. But you can see whenever this has gotten up in these 85, 90% area, especially if you've had divergence, that gave you a pretty good area to, get out of Dodge or early warning. And you can see that was in July, and we've had a good correction since. Now, this is down here around the 23 level, 23% level, similar to the May time frame. You can see March it was down there quite a bit more oversold, but it has worked its way down pretty good. Next, chart 39, here's all these McClellan oscillators, these advanced decline, are below their lower Bollinger Bands. So that's why I stated that I think we're getting closer to some sort of oversold bounce. You can see, again, they're not perfect, but whenever you get below the lower Bollinger Bands, and sometimes you need to be below the lower Bollinger Bands for 2 or 3 bars. But you can see overall have been pretty good signals in the past. So you can see the S&P here. Chart 40, here's the advanced decline for the NASDAQ 100, also below its lower Bollinger Bands. And you can see the past sell signals and buy signals have been pretty good. So that's something to take notice of. Chart 41, here's the Dow, also below its lower Bollinger Bands, right? Next, chart 42, here's the advanced decline for the XLK ETF, same deal, below the bands. You can see the previous times you've been outside the bands, they can give pretty decent signals overall. Chart 43, here's the advanced decline for the XLY ETF, same deal. So you can see, guys, a lot of these have this. So now we just need some sort of catalyst for a bounce. But again, for that, we also need to see the 10-year Treasury yield stabilize and the dollar. Next, let's follow up on some of the market sectors. Chart 44, here's XLK Technology closing right on this trend line again. And again, look how great the sell signal was on that 14 RSI back here in early August. There is a little RSI divergence on the 5 RSI for now. It can be blown out, obviously. Chart 45, here's the SOX semiconductors. Remember I showed this last week. It looked bearish. We lost the 50-day moving average. And since then, we've continued to decline. Long-term support is down here at 32.30. Next, chart 46, here's the SOXS, triple inverse ETF for semiconductors. We gave that as a trade idea, a way to play a breakdown in semiconductors, and that's been moving up nicely. Chart 47, XLF financials, now down to its 50-day moving average. You have the 200-day moving average below that. Chart 48, here's the banks. They've been really weakening, especially spooked by some of the comments from Fitch downgrading a lot of the banks. The aggressive move in interest rates by the Fed does not help the banks either. Puts stress on them, and you can see this is well below its 50-day moving average now. Chart 49, here's the transports, also weakening below its 50-day moving average now. By the way, here I extended this trend line out. That could be a potential support if it gets down to there. Chart 50, here's XLB Materials. Since losing that uptrend line, continues to weaken, and of course lost the 50-day moving average yesterday. 200-day moving average could be next target. Chart 51, XOP Consumer Staples, also been weakening as well. Next, chart 52, Home Builders. I've been showing this as a potential little rounded top, little head and shoulder top there. Breaking the support here. Next target would be the 50-day moving average if you shorted. Next, chart 53, here's the 2-hour view. You can really see the clean trigger line for a short. This trend line that was lost today, good volume. If you went short, a logical stop could be just above this 84 area. Next, chart 54, XLE Energy also pulling back along with everything else. Logical area, it was up here near this resistance, pulling back now to the 20-day moving average. Overall, it's holding up much better than everything else. Next, chart 55, oil services, same deal. It's holding up pretty well here. Again, there is a loss of momentum. You can see the MACD, but still holding up fairly well. Next, chart 56, here's the weekly view of oil services. Getting good rally off this demand zone from back early summer. We filled the supply zone. You can see we're pulled back from the upper portion of the supply zone, which is what I wanted. I am looking for a lower high eventually on this, or higher low, I mean. So eventually, I think it could fill this thin zone, but logically, it's pulling back here off that resistance. Chart 57, here's ERY. That's the double inverse ETF for energy. Way to play a pullback there, and you can see it's bounced nicely. You had a nice MACD divergence there. Next, chart 58, here's the 2-hour view. Nice move. Next, chart 59, here's the bullish percent energy index system. Again, still hasn't officially given a sell signal. Your sell signal is when this falls below the 9 and 20 MAs here. You can see the last buy signal there in June. Again, it is in nosebleed territory up here at 91%. Remember, these bullish percent charts are normalized from 0 to 100. So rarely do they get up, to these upper levels. And so be aware of that. Next, moving on to commodities. They've been weakening, as you know, with a strong dollar. Here's DBC. Again, so far, more of a three-wave ABC-like pullback, retesting its 200-day moving average. It had a nice move out of the wedge. Next, chart 61, crude oil, weakening quite a bit here. Lost the 20-day moving average today. 200-day moving average is below. Next, chart 62, natural gas continues to weaken. Remember, it got to the upper range of this last week and has pulled back nicely. I do think there is a buying opportunity sometime on this pullback though, so I'll be watching that because I do like this long-term base. Next, Jarbor 63, here's Boyle. Remember, UNG is the other ETF. But this is something on monitor. You can see this three-wave pullback at the moment, potential ABC. This would be if C was equal to A, would project lower. But, you can see it's already come down pretty good. You got three waves. This is something I'm watching for a potential reversal. Remember, we have natural gas inventories on Thursday, likely to be a catalyst. Next, Jarbor 64, copper, down this week as well. Really getting close to losing this trend line. You can see sort of like a slanted head and shoulder look to it. And I do think we're going to be going into recession, and that will cause weakness for this metal. Copper's used in pretty much everything, as you know. Jarbor 65, DBA, agriculture, really good correction from the July highs. Trying to bounce a little bit off this little trend line. All right, that does it for commodities. Let's move on. Jarbor at 66. Here's the 10-year Treasury yield. Continues to rally. Broke out of this pattern, back tested as support. Man, what scares me though in the market is this looks super bullish. Does this look toppy? No. Looks like a breakout, like a stock. We'll see though. Next, Jarbor 67. There's the weekly view. Next, Jarbor 68, here's TLT 20-year bonds. Again, just absolute textbook action. You broke support, you rallied, back tested it as resistance, and was selling off. Remember, bonds move opposite to interest rates. If this keeps selling off, the market's going to have a tough time rallying. Okay, so we need these areas to stabilize. Finally, Jarbor 69, here's high yield corporate. It was holding up fairly well, but now it's starting to weaken here. Moving on, Jarbor 70, here's Bitcoin, starting to weaken here as well with the market. Next, Jarbor 71, here's the tradable ETF, BITO, again, never triggered as a long. Next, Jarbor 72, Mara. The problem with Bitcoin is the stocks are weaker. Look at Mara. Tried to bounce off its 50-day moving average the other day, lost it, and just downtrending here. Next, Jarbor 73, here's the US dollar, up yet again today, basically testing this trend line and 200-day moving average. Will it pull back here, or is it going to rally and break out? Next, Jarbor 74, there's the weekly view of the dollar. You can see this little channel. Still has room higher to go in that channel. But you can see how the dollar rallied right off that 200-week moving average. I always state the 200-week moving average is important. Next, Jarbor 75, gold. As we talked about this last week, gold needed to hold this uptrend line. It did not hold it. And the stocks needed to outperform, which they've done the opposite. Look, GDX has been underperforming gold since mid-July. That was the problem with gold. Now it looks like this potential ABC may be playing out. Gold has a date with its 200-day moving average or lower. Next, Jarbor 76, here's the ETF, closing slightly below its 200-day moving average. By the way, there's an open gap from March down there around the 174 area. That could be the next target. Next, Jarbor 77, here's the weekly view of gold. I discussed this on the weekend, so this is more than likely the scenario where this potential ABC get lower prices down here. Then maybe we'll see if gold can put in some sort of bottom. Next, Jarbor 78, silver, been weakening, as you know. Big sell-off last couple weeks, lost that trend line, continues to weaken. Jarbor 79, there's the weekly view, nearing this uptrend line now. Bearish view as a head and shoulder. Next, Jarbor 80, GDX, just continues to melt down. There was an open gap back here, which was filled today. So there is a demand zone right in here, lower prices, but so far this thing cannot get out of bed. Next, Jarbor 81, here's the 2-hour view of GDX. We had a coil like fourth wave here, and now it's sold off in some sort of fifth wave. Just ugly action. I don't see anything telling me this is bottoming. Next, chart 82. Now, short term, this is GDX has an advanced decline indicator, and it's below its lower Bollinger Band. So short term, we may be getting close to some sort of mean reversion bounce. All right, guys, let's follow up with some trade ideas. As far as trade ideas, I really didn't add anything tonight. I added one thing because this is not the market to be aggressive in. So chart 83, here's RSI. I gave this as a long idea on Monday, and I gave you a trade yesterday, but if you didn't take your profits, you gave it all back. That's how the market's been. If you get along and you get a little pop, take some profits. When you're uptrending, then you can give things more room. Chart 84, AAOI was another one. Gave a nice trade in August. This is a long idea of mine a couple weeks ago. And then last night, Steve gave it as a short below this doji, and you got a nice little short trade out of that. Chart 85, oust. This is the long idea I posted on the weekend. It gave you a pop on Monday. It did give you a pop intraday yesterday, but if you didn't take profits, it's coming down. Now the pullback is on light volume, so to me it looks okay if you're still in some. The confluence and moving averages here, I'd like to see it hold that. Chart 86, STLD. I showed this on Monday, this inverse head and shoulder. It's still valid, guys. It's chopping around. Next. Chart 87, SLB. Steve, it's a Slumber J energy stock. Steve showed as a short last night, trying to trigger here a little bit. Finally, chart 88, PHM. This is a utility. And anyway, this looks vulnerable. Actually, it's not a utility. It is a home builder. I remember XHB looks toppy. So this is one that has some meat on the bone. If it breaks this to the downside, you could have a quick short at least down to the 50-day moving average. All right, guys, let's see what happens tomorrow. Check on futures. ES futures are down about 8 points. So they have been slowly weakening while I've been recording. Anyway, we'll see what happens tomorrow. Have a good evening. Take care.